FTX sold about $1 billion of Grayscale's Bitcoin ETF, explaining much of outflow. Sources: BTC's price has fallen since Bitcoin ETFs were approved. In theory, now that FTX is done selling its substantial holdings, the selling pressure could ease since a bankruptcy estate liquidating holdings is a relatively unique event. 10 years of decentralizing the future. May 29 to 31, 2024, Austin, Texas. The biggest and most established global hub for everything crypto, blockchain and Web3. Register now. Investors have sold more than $2 billion worth of the Grayscale Bitcoin Trust, GBTC, since it was converted into an exchange-traded fund earlier this month. A large chunk of that exodus was FTX's bankruptcy estate dumping 22 million shares, according to private data CoinDesk reviewed and two people familiar with the matter. A slew of spot Bitcoin ETFs began trading on January 11 after the U.S. Securities and Exchange Commission finally approved them following years of delays. But the Grayscale fund had already existed for a decade, structured as a less attractive closed-end fund, and had accumulated close to $30 billion of assets when the SEC approved its conversion to an ETF, along with blessing 10 newly created Bitcoin ETFs. While the new funds, issued by the likes of BlackRock and Fidelity, have seen inflows, billions of dollars worth of Bitcoin have been pulled out of GBTC. The data CoinDesk source suggests FTX accounted for much of that. The 22 million shares it sold, which took FTX's GBTC ownership down to zero, were worth close to $1 billion. Bitcoin's BTC prices. Follow the URL for the full article. For more on this story, visit the news article link.